Okay, guys, we are back with another 5-minute trading session. This is a live account. This is real money. This is me getting back into day trading, getting back into the 5-minute time frame, and we are down $200. 200 bucks. Okay, 187 now, 175. But wow, I forget how freaking exciting this is. So much happens in just a few minutes. So I made a previous video where I was in one trade before this one. Price had gotten to my stop loss and I needed to reverse. Now, just these are things that I'm going to walk through, just getting back into the 5-minute time frame. Some things that I need to put into place, helping me master this time frame, make better decisions, and walk you guys through the strategy and what an open trade looks like, an open live trade. I don't know how else to show you guys that this is real besides we've got TradeStation here. I'll pull it up. You guys can see this is an open account. We've got this position open right here. I'll let you guys see the last 4 of the account numbers so that you guys can cross-reference on all of my videos. You know, that is my one account. You guys can even weed through and make sure that account balances are making sense, that trades are making sense. This is the same account that I've been showing you guys. So this is a real live trade open on my TradingView account. I have TradeStation connected or synced to TradingView so that I can place all my trades here instead of having to do it in the brokerage account. But right now we've got an open position. I am in a long position in copper on a 5-minute time frame. And let me walk through some things that I want to put into place moving forward. This is fun. I'm in a position, I'm so grateful that I'm in a position to where I can experiment with a live trade. I'm in an open trade right now, just having fun in the 5-minute time frame. I'm so grateful that I'm in a position to do that. I don't recommend it, but I can do it, so watch me. We're in the 5-minute time frame. I reversed a position to go long right here when the downward trend line was crossed. So you guys know I'm a trend line trader, especially a trend line break trader. So when we get a break of a trend line, I'm either thinking long positions or short positions. If we get a break of an upward trend line, I'm thinking short positions. If we get a break of a downward trend line, I'm thinking long positions. And you guys, if you've been following along my journey, if you've been following along my YouTube videos, you can probably piece together my strategy. I've got action lines and safety lines. Safety lines are essentially what keeps my risk mitigated. It is where my stop loss goes on the other side of. That's where I'm willing to let the price come to. That's the loss I'm willing to take when I'm in a position is my safety line. Sometimes my safety line is in profit. Sometimes it's in loss. And then the action line is the original line that gets crossed that's telling me to get in, to take action. So right now we're down $100, and some things that I want to talk about that I would like to implement in this, going back to the 5-minute time frame is now that I have time and I can make decisions a lot quicker, I'm not looking at 4 hours worth of price movement on one singular candle. I can put some things into place to help me make better decisions, especially since I'm making decisions quick. So if we are thinking of getting into a trade because a line is broken, I'm sure you guys experience a lot of fake outs in the 5-minute time frame where price looks like it's crossing, it's poking through, and then turns around in the other direction. What things can we put into place to help us make better decisions and avoid some of those fake outs? And the first thing is we can wait for the candle to close. So we can wait for that full 5 minutes to make sure that the candle breaks on the other side of the line. So we've got a downward trend line, price broke through. I immediately reversed my position. I mean, it happens to be working out a little bit better right now, but I was in drawdown about $200 just a few minutes ago. Now we're only down 112, but I want a little bit more confidence in my trade, or a little bit more confirmation that price is truly breaking. And what better way to do that? By waiting for the candle to close. So if I had waited for the candle to close instead of just immediately reversing my position from short to long, I probably would be feeling a little bit more comfortable right now. And I wouldn't have entered that trade. I wouldn't have reversed. I'd still be in that same original trade. I would have been up and probably back to only, up a few dollars right now. By waiting for the candle to close, it just gives me a little bit more confirmation, a little bit more confidence that price truly is changing direction. So this is something that I maybe would have done a little bit differently. So instead, I'm down $150. I would have felt better if I had waited for this candle to close to feel more confident about switching, taking that long position. So right now, I am still in a long position. I'm wanting the price to continue up. Now, what's keeping me in this trade? Why am I still in this trade, but I'm down $150? It is this line right here keeping me safe, my safety line. Until price breaks this upward line, which it touched once, it touched twice, it very well could touch it again, or it could break it, and then I'd have to solidify this loss. But this is the only reason I'm still in this trade, is because price has still respected this upward trend line, my safety line. Let's kind of watch it together. Let's see. All right, I'm down 137.50. Are we going to get any more movement? Of course, it decides to do nothing right now as we're just sitting here looking at it. Well, what I want to do with my lines right now, if I want a little bit more confirmation, what I'm going to do is I'm going to take this line and rotate it to this new high where copper came up to 4.537-ish. and then fell down. So now if I'm considering taking a position, or maybe you're not in any positions right now. I'm in a long position. I'm going to give it until it breaks this upward trend line. But let's say that you're not in a position right now. You would have your lines exactly where mine are, and you would simply just wait for the price to break one of these two. Right now it's smack dab in the middle. It's in the middle of this downward line and this upward line. Now you just sit on your hands and you wait for a good position and wait for one of these to get broken. We don't know if, the downward line or the upward line is going to get broken. So we're simply going to wait. And some things that I maybe recommend is wait for the candle to close once it does break. Once one of these candles breaks this downward line or this upward line, let's wait for the candle to close. It's only 5 minutes. I'm sure you've got 5 minutes to wait to just have a little bit more confidence about this position that you're in. So let's wait for 5 minutes. Let's wait for that candle to close. And if it still has broken that line, let's take that position. Let's get in. And now we have an action line, which is the one that got crossed. And then the opposing line is our safety line. That's the one that's going to keep us in. Seems easy, right? But now we're on the 5-minute time frame. So we're going to be making a lot more trades. We're going to be making a lot more decisions very quickly. Price moves and ebbs and flows so much in the 5-minute time frame. So just be prepared for that. To be honest, I'm excited. I haven't had this much adrenaline in a trade in a really long time. So now I'm down 150. It was down 170 a second ago. Now it's 150. I was up, $70 earlier in this trade. So this is a lot of fun. But making sure that you are also mitigating your risk. Do not go over 1 to 5% of your capital, especially if you guys are new traders. Making sure that you have a good strategy. Maybe it's not my strategy, but making sure that you have full confidence in the strategy that you use and you are mitigating your risk. You're abiding by your rules outside of just psychology, which is a whole nother ball game. So making sure that outside of psychology, you've got your strategy down. Right now, I got my strategy down like the back of my hand. I could trade this strategy on any time frame. A 1 minute, a 1 hour, a monthly, a weekly. Right now we're trading the 5 minute. The strategy I've got down. The psychology is always different. It's always new. I'm always finding out new things about myself as I'm trading. Right now, I shouldn't have this much adrenaline in a trade, but I do. And maybe it's because I also had an energy drink not too long ago. But it's way fun to be in this 5-minute time frame. So let's kind of watch this. Let's see what it does. I'll maybe lead this up on the screen recording and I'll pause my audio and then we'll kind of watch this play out in fast time. And then I can go back through and explain what I did or how this trade went. All right, guys. So you got to see what price does within just a few minutes here. We are down $300, but that's okay. That's all right. If you guys are trading comfortably, also understand that copper has much smaller versions. So I'm trading a mini version of copper. It's a little bit more expensive, a little bit more pricey, but I'm able to, stomach a loss like this or handle a loss like this or just even a position like this. But if you guys are new to futures trading and you've got much smaller capital, much smaller position sizes or much smaller starting balances, we've got something called the micros, which is going to be 1/10 of what I'm trading. So you may only be down $28 instead of $287. And then you have the ability to trade multiple micros. So maybe you want to scale in and out a little bit. Whereas I'm trading just one mini, I can't go any lower than that. It's just one singular mini. But when you have the ability to trade the micros, you can trade 3 micros, 5 micros, maybe even just one singular micros just to kind of dip your toes in, just to get a feel for what it's like to trade the futures market. But understand that you guys have the ability to mitigate your risk and to come in much lower in position size than I'm in. So experiment with the micros. See what it's like. Understand, how much a micro costs, how much the risk is involved in your account size, making sure that we're trading between, 1 and 3% of our capital size. And right now, I want to show you guys why I'm getting ready to solidify this loss and why I may be considering short positions and getting right back into it. So we're at the 5-minute time frame. We're making a lot of decisions real quick. So right now, I am down 262. I'm going to reverse this position. So I was in a long position. Now I'm thinking of going short. So we're going to take our mouse to this open position, and we've got this fancy little literal reverse button. Okay, you didn't get to hear the sound, but usually you get it. You get a little ding. Okay, now we are in a short position. So I was long, it reversed me to go short. Now what am I thinking here? I solidified a loss, and I consider that, I call those fees. So when I am taking losses in the market, I consider it a fee, like everything else that you pay in life when you do literally everything. I've got DoorDash coming, I had to pay a fee to get that DoorDash over here. So I look at losses in the market as fees. It is as per usual. You'll pay fees and everything in life, and that's trading is not exempt. So I consider this loss a fee, but now what am I thinking moving forward? Now I am simply going to reverse everything. So I had an action line, I had a safety line. I'm going to reverse those. The old safety line is now the new action line. The old action line is now the new safety line since we are in a different position here. So now what is keeping me safe is this downward red line. As long as price can stay below this red line, I'm happy, I'm comfortable, I'm going to be making money. If price breaks this downward red line, then I have to pay yet another fee. And essentially, I continue to do this until I finally find the trend, the one that goes. And the name of the game here is, yes, you pay a fee when price doesn't work out. You pay a fee when price doesn't work out. You pay a fee when price doesn't work out. But when you finally catch the trend, you catch the runner, you make up for all of those fees plus more. And that's kind of the name of the game here when we are trend line traders. When we're in consolidation, when price is moving sideways, we get tossed back and forth. We pay a fee. We pay a fee. As long as we are in the correct position size and we're not over leveraging, these fees are small. The $200 was small for my account size. And it should be $20 maybe for your account size, or $2 for your account size. So just making sure that the position size you're in makes sense for the risk of your capital of your position or of your starting balance. And now understanding that, okay, yes, we pay these little fees, but when we are able to catch that runner, catch that long move, it makes up for all of those fees plus more. So the name of the game is not only to make sure that you are set up for the right entries, but it is also to make sure you have the right exits. So if you saw some of my videos before, you understand that I am struggling with having these higher position size. I'm coming in a lot heavier than I'm used to. I'm trying to grow my account a lot more, and I'm struggling with psychology and holding those winners longer. It's tricky to see these big numbers that I'm not, as used to, and it makes you want to take profit sooner. But making sure that we are truly letting these trades play out, that's where we capitalize and we can be consistently profitable with this strategy if we can let those runners run, if we can let those winners run. We do that by simply not looking at the dollar amount. To be honest, if you could actually remove the dollar amount, that's going to be better for your psychology. Maybe we want to look at ticks. Maybe we want to look at pips. Maybe we want to look at percentages. But don't look at the dollar amount. If we can remove the dollar amount from the psychology, we're able to trade more purely based on the strategy. So if I can continue to watch this trade play out and continue to trend down, I am trading as per the strategy. If I close because I am up X amount, or I just want to simply make that last loss back, it doesn't allow for us to catch those big runners or to make this consistent. If you're just simply trying to make up the last loss, you're going to find yourself being back at break even or over trading or revenge trading, when we just simply need to follow the strategy. We need to stay in for the entirety of it and let this thing ride. So right now we're up $12. This may continue down, maybe it doesn't, but the name of the game here is to try to stay in for the entirety of the trend. So I'll check back in with you guys on this trade. Maybe I'll continue to screen record and I'll do another little pause. I hope that you guys got the idea of, this strategy. How I find my profitability and how I find my consistency is because I am able to stay in for these runners. All right, there we go. We're up 62, we're up 70. This is so fun. I love watching this. Okay, but the 5-minute time frame is different than the 4-hour time frame. Now, talking about the perks of the 5-minute trader is we can close this trade. Yes, the adrenaline is there. It's fun. It's cool. It's emotional. But the coolest part is I get to close this trade and then not have to think about it anymore. So with that being said, we are going to close this trade and not have to think about it anymore. Here we go. We were up $37. Boom, we collected a $37 profit. We're done. We are done trading until I open the screen again tomorrow and place another trade. I can sleep sound tonight. Thank you guys for watching. Don't forget to hit that like button, subscribe to my channel, and hit the bell for notifications, and I will see you guys in the next video. Thanks, guys.